Thank you very much. Welcome everyone to the KPPA Audit Committee, November 27th, 2023. I'd like to call the meeting to order. Mr. Board, can you give us our legal statement, please?
Yes, sir. For the record, I want to note this is a regular meeting of the Kentucky Public Pensions Authority Audit Committee. This meeting is being broadcast via video teleconference pursuant to Kentucky Revised Statutes, Section 61.826. It may be viewed by the public at the Kentucky Public Pensions Authority offices located at 1260 Louisville Road in Frankfort, Kentucky. It is also being broadcast to the public via Facebook. I ask if you are speaking and are not appearing by video, please identify yourself before talking. In the event the video or audio broadcast is interrupted, we will attempt to reestablish a connection. If a connection cannot be reestablished within 30 minutes, the meeting will be adjourned and rescheduled to another date. Thank you.
Thank you very much. Ms. Rankin, would you do a roll call, please?
Yes, sir. Mr. O'Meara,
Here.
Ms. Hampton,
Here.
Ms. Pendergrass,
Here.
Mr. Summers.
Here.
Thank you.
Thank you all. And Ms. Rankin, do we have any public comments?
No, sir, no public comment.
All right. Next is the approval of the August 24th, 2023 Audit Committee minutes. Do I have a motion to approve?
So moved.
Thank you. And a second?
Second.
Having a first and a second, do we have any discussion?
I have one correction I'd like to suggest. It's on page 4 of board books, page 3 of the minutes. It is the 4th line. Could we reword that to say delete components of COSO in section 7 internal control system? There was some misunderstanding about whether or not we deleted the entire section or just a piece of it.
Any comments? Are we willing to accept that amendment?
Betty, can you say again what you wanted to change it to?
Delete components of COSO in section 7 internal control system. Because the only thing we deleted was the discussion of the components. We didn't delete the entire section.
Okay, that sounds good. Thanks.
Sure.
All right. Do I have a motion to approve the minutes as amended?
So move.
Thank you. And second?
I'll second.
Any other discussion? Hearing none, all in favor, please say aye.
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 Bye.
Any opposed? All right, that's passed. Next, I'd like to welcome Mr. Gordon from the Auditor of Public Accounts to talk about our draft fiscal year ending June 30, 2023 external audits. Mr. Gordon, welcome.
All right. Thank you, Mr. O'Meara. And good morning, members of the Audit Committee. So as mentioned, I am Adam Gordon. I'm from the Auditor of Public Accounts, and I'm the auditor in charge of the Kentucky Public Pensions Authority audit for fiscal year 23. Linda Hinton, who is the audit manager, is also on if you all have any questions for her. But as you know, KRS requires that at least once every 5 years, the APA is required to perform KPPA's audit. So 2023 was that year. And then our last audit was in fiscal year 18. Management is still responsible for the preparation and fair presentation of the financial statements with that. So we're just engaged to audit those. We audited the act prepared by KPPA and provided management with our audit opinion and government accounting standards, also known as Yellow Book letter, for the inclusion of the ACFR. So we do have a draft opinion in there. I believe the bookmarks may be better to find it, but I think it's page 16 in the ACFR. So it's a few pages in. So, but while she's finding that, so we will provide you the final opinion on December 6th during the KPPA board meeting once that has been approved to be released. So today we're just looking to make sure that it will be approved. And today is our end of fieldwork date. So once you approve it to send to the KPPA board, we can conclude our end of fieldwork today, as long as there's no other changes to be made with the ACFR. So KPPA is a component unit of the Commonwealth of Kentucky. So our audit of KPPA's ACFR must be finalized before the release of the Commonwealth's ACFR, which is normally in the middle of December. So we're right on schedule with this, having these meetings here. So, all right. So as part of our audit, we're also required to communicate to those charged with governance certain topics. So we do have a letter on that if you want to pull that one up. But there are some more detailed items I'll need to discuss with you on that. But certain topics to discuss will include the description of our responsibilities as the auditor, our planned scope, which is expressing an opinion on the financial statements, any significant accounting practices or estimates or misstatements, difficulties encountered, and findings or other issues. We will be emailing the final letter to Mr. Piercy, the chair, and to Mr. O'Mara, the chair of the audit committee, once we finish. We did not note anything unusual in this letter. But some specifics I need to discuss is that the statement on auditing standards, AUC 260, requires the auditor to provide those charged with governance with additional information regarding the scope and results of the audit that may assist them in overseeing management's financial reporting and disclosure process. So our responsibility is to express an opinion about whether the financial statements prepared by management with your oversight are presented fairly in all material respects in accordance with accounting principles generally accepted in the United States. Our audit does not relieve you or management of your respective responsibilities. We conducted our audit consistent with the planned scope and timing we previously communicated to the board chair in our engagement letter. Our personnel have complied with all relevant ethical requirements regarding independence. So all of our auditors on this audit were independent. We have identified the following significant risk. So with each audit, we have to identify those. And the three main ones that we have are management's override of controls, which is a mandatory risk in accordance with auditing standards. Improper revenue recognition is a presumed risk of material misstatement in auditing standards. And then we had one on ineffective reconciliations among multiple computer programs. So those were our three significant audit risks that we had identified. We did not identify any significant accounting policy changes from prior years, and there were no initial selection of accounting policies. Regarding accounting estimates, the most sensitive estimates relate to fair value of investments on the net asset value, or NAV, the net pension liability, and the net OPEB liability. We evaluated the key factors and assumptions used to develop the NAV, the pension and OPEB liability, and determined that it was reasonable in relation to the basic financial statements. We did not identify any significant unusual transactions during the audit, and we did not identify or obtain any information that indicates any fraud may have occurred or been suspected during our audit. We also did not encounter any significant difficulties really at all in dealing with management relating to the performance of the audit. Everybody was very helpful during the audit. There were no uncorrected misstatements noted during our audit, no disagreements with management, or circumstances identified that affect the form or content of our auditor's report. So management has provided us with a signed representation letter dated today. We received that signed by Mr. Eager and Mr. Lamb, and they have not consulted with any other accountants about auditing or accounting matters during our audit. In the normal course of our professional association with KPPA, we generally discuss a variety of matters. None of those matters discussed resulted in a condition to our retention as KPPA's auditors. Regarding other information included in annual reports, our responsibility does not extend beyond the information in the audit report, and we are not required to perform any procedures to corroborate such other information. However, we have read those other reports and information and considered such when evaluating the ACFR in terms of the matter of its presentation, and nothing was materially inconsistent with that presentation. All right. So as I kind of mentioned before, after today, we only expect just formatting changes. So nothing significant to the statements, to the notes after that, if there are any formatting changes. We will provide our opinions by email to Mr. Lamb and Ms. Connie Davis after the ACFR has been approved by the KPPA board on December 6th for release. The official issuance of our audit is the email, even though the ACFR itself will not be released at this time. Once a final version of the ACFR is available, we still will, with whatever formatting changes may be needed, we will still review it one more time and then provide an authorization saying that there would be no changes. Ms. Pendergrass, it looks like you have a hand raised.
Yes, I wanted to go back to your listing of the significant risk on page 3 of your letter and page 317 of the board books. When you tested for those risks, did you find any instances where there were problems with in particular management override of controls or improper revenue recognition?
So related to those two, we did not find any issues. I'll discuss here in a little bit just something related to reconciliations, but
Sure.
everything we found was accurate, so nothing that would need to be reported in the audit report or affect our opinions.
Thank you.
Yep. All right, so our opinion. So we are issuing an unmodified, or what you can call a clean opinion. Our opinion letter will have one unusual paragraph in it, probably that you've seen from the prior years. So our office prefers to include an emphasis, a matter paragraph regarding the component units of the Commonwealth, just so we emphasize that our opinion is on KPPA's ACFR and not the Commonwealth's ACFR. So you will see that in our audit opinion letter. We also have another paragraph referring to the 22 audit report being issued by other auditors, and that information was being presented as comparative information in that report. All right, so some of the content in the statement. So we're going to defer most of the financial analysis to management. The financial performance of KPPA is detailed in the management discussion and analysis portion of the ACFR, but I'm just going to go over some highlights that I thought were significant. So the total fiduciary net position is $16.9 billion for pensions and $17.2 billion for insurance. That is roughly a $1.7 billion increase for pension and $600 million for insurance. There was a noteworthy increase in public equities this year of about 2 billion for both insurance and pension combined due to a change in investment strategy that was implemented by the board. That resulted in other investment types kind of slightly decreasing, but not significantly. So total investments overall increased 1.5 billion for pensions and 600 million for insurance. So that was because of the net investment income increasing by 2.3 billion for pension and 1.1 billion for insurance, compared to the net investment loss of last year. So total benefit payments increased by 51 million. And then total pension contributions remained relatively the same as the prior year at about 2.7 billion. So now on to our findings. So just an overview of our finding process. So as you may know, findings are classified as material weaknesses, significant deficiencies, or control deficiencies. So we determine how a finding should be classified based on the likelihood of the misstatement and the magnitude of the misstatement that occurred or could occur. Control deficiencies appear in the management letter for action as management sees necessary, while material weaknesses and significant deficiencies appear in our audit report. So there are no material weaknesses or significant deficiency that we noted in our audit report. So we only had control deficiencies. And we had 2 of them that we noted in a management letter. So Sherry, if you want to go to the control deficiencies, it might make it.
Sherry, it's on 310.
Okay. So the first one is related to investment reconciliations. So this was kind of in relation to our risk. Now these are, again, just control deficiencies. So nothing was wrong with the account balance with this. These are just internal control recommendations that we had. But essentially what we did, we reviewed the accounting branch reconciliations that were performed. So reviewing it from the custodian bank records to the accounting system. And just during the reconciliations, we just thought it would help improve the control structure if there was some indication of when the reconciliations were being reviewed. So we essentially just recommended some more documentation on those reconciliations. And with discussion with the individuals working on those reconciliations, they had already implemented something for fiscal year 24, and I've already updated those procedures. So they were aware of the issue and have corrected it for the next fiscal year. So, but since we found it in the 23 year, we just wanted to make sure that recommendation was noted. All right. So the next one that we had was regarding healthcare premium wires. So in our review, we were reviewing transfers from the plan bank accounts to Humana and Department of Insurance for the payment of the healthcare premiums. So in our review, we noted just the 3 items there, specifically the support that was provided had different amounts that was transferred. Some of it was being transferred to the incorrect plans, but all in all, the net change ended up being roughly about $30. So everything did end up kind of correcting itself in the end. And we had notified management of KPPA, and they have since corrected those, and the correction has been made in the financial statements. But really the main issue was just the documentation provided to move those wires didn't provide enough information. And then plus there was a segregation of duties issue where an individual was preparing the support somebody else was looking at it, but then the individual that prepared it was actually making the wire. So we recommended that those processes be separated. So based on our discussion with KPPA, they have since are working on correcting, updating their procedures to ensure that's in there. So. All right, so with that, we've discussed those charged with governance letter, our opinion, and then the control deficiencies. And just to kind of speak on those again, those normally are just sent to management, and management did request that they were presented to you all. So that kind of shows how they work with these findings and that they want to make sure these are addressed. So I greatly appreciate that. But again, it was at their discretion to present those. But with that, that simply concludes our presentation on that. But just in closing, I would like to thank all of KPPA's management and staff. I mean, they really helped make this audit run as smoothly as it can be. And they provided us everything that we needed and kept us informed if there was any significant changes that may happen. So, all right, Ms. Pendergrass, it looks like you have a question.
I believe Mr. Chilton was up first.
Oh, okay. Sorry. Mr. Chilton?
Yeah, you can go ahead, Betty.
I just wanted to thank the staff for including these management letter comments. I think it provides some additional transparency and accountability, and I appreciate the effort to include this information to the trustees. Thank you very much.
Mr. Chilton?
Yeah, my question is at a very high level, are the procedures that you undertake similar or different from what we've experienced in the last 4 years with outside auditors? Do you look at additional issues, or could you explain that?
Sure. So we did review the working papers of the previous auditor. So there were some differences, and it's just a difference in auditing procedures. So we take an internal control testing approach. So we do test internal controls with that to see if we can reduce substantive testing. There were some areas we felt like we could be more efficient with our audit by testing controls. So we did do that. I think that was one difference that we had. Since we are in here only 5 years, we do perform just a little bit. I wouldn't even say it's more testing on investments, but we just try to gain more of an understanding with the investment strategies and stuff, just so we can have effective testing. But I think probably the main difference is our internal control testing compared to the previous auditors, and that is a judgment. It's just how we assess risk. So.
Mr. Chilton, they also looked at the technical side of the house a little bit more closely than Blue ever does. Blue is our auditor for the other 4 years, and they generally just look at the external audit that we do on that, but the APA looks a little bit more closely at the tech side.
Yeah, that's a good point. Thank you, Ms. Adkins. So we did. I'm not as involved too much since we have another group of IT auditors. It still rolls up into the same, but we did audit both the START system and the accounting system. So, yeah, thank you.
I just want to give the auditors staff a thank you for your cooperation and your thoroughness. We appreciate it very much.
Thank you. Any other questions?
Any other comments?
I had
Hearing
a
none.
couple of minor technical issues on the ACFR. If we go to it's page 11 of board books, it's let's see a page number on it for the book. It's management's responsibility for financial reporting. The word judgment is misspelled. I learned the hard way that judgment does not have an E after the G. And I just tripped over that one. I did not read this for for typos or misspellings. The other question I had is on page 29 of board books. We have a comment that member contributions increased because of an increase in employer pay credit. And I'm a little confused about how the employer pay credit increases member contributions.
Betty, I can talk to that a little bit. The employer pay credit is part of the tier 3 contributions that the employer pays for the member's benefit. In past years, when it was initially started, executive staff years ago, when tier 3 came on board, because the employer pay credit belongs to the member, once they are vested, if they ever take a refund, they get the employer pay credit and any interest earned on that employer pay credit. It was decided to roll that up into member contributions on the financial statements. So this past year, in talking with executive staff, because tier 3 continues to grow, it was the employer pay credit was making the member contributions increase significantly more than one would expect due to membership increases and payroll increases just based on the 5, 6, or 8 or 9% member contribution that you're used to seeing in there. So we decided to separate it out on the financial statements this past year, but it's still considered member contributions since the member would be due, since those contributions belong to the member, although they're not being withheld from the member's earnings.
And that's where I get confused because the members are not paying those amounts. They are part of the member's account. I understand that it is their asset, but is actually paid by the employer, not the member.
Right. And so the wording on there is should probably be made more clear. I agree.
I think the increase in the employer pay credit is an increase to employer contributions. Now,
Right,
if we're
and-
classifying it differently,
Right.
the
And
accounting
that's
system, then I think we need to look at the definition of employer contributions versus the definition of member contributions.
right. And you're exactly right. We talked with Mike about this, and that was the reason we split it out this year. And I think our wording here is we need to tweak that.
Yes,
Thank
I
you.
agree with all of that. Mike's absolutely of the opinion that it's not member contributions. So that's why we had broken it out. So we'll tweak that piece.
And those were the only comments I had, Bill.
Thank you, Ms. Pendergrass. Anyone else have any comments or questions? All right, hearing none, may I have a motion to accept the APA report on the draft fiscal year ended June 30, 2023 audit, including GASB 67 and 74, and forward that to the full KPPA board for consideration and approval.
So moved.
I'll
Thank you. Do I-
second, but I'm also looking forward to next year when we can have separate financial statements for CERS and KERS and SPRS.
Well, that's an analysis that is ongoing. Thank you. So I have a first and second. Any discussion? Hearing none, all in favor, please say aye.
Aye.
Any opposed? Well, that passes. Thank you, Mr. Gordon, and all your staff. We appreciate your audit and your presentation here today.
Great. Thank you. If it's all right with you all, Linda and I will go ahead and step out, but I will be speaking again to the CK and KPPA boards next week. So if you all have any other questions, feel free to ask next week if you'll be attending those. So thank you all.
Thank you very much. All right, now we move on to looking back at FY 2022, the GFO ACFR. And Ms. Davis, do you have a presentation for us?
Yes, thank you. Good morning, everyone. GFOA reviewed our 2022 ACFR and had 4 comments for us to correct and work on for our 2023 ACFR. And the first one was within the introductory section. And it had to do with the fact that we did not list the page numbers of where they could find the investment professionals that provide services to our post-employment benefit system. So we corrected that this year by placing page numbers on the org chart regarding where that information could be found. The second comment was on the transmittal letter. We had addressed it to the boards and not to the members, and we corrected that this year. We have addressed it to the members as well as the board. And the last 2 comments were on refunds and that were for the statistical section. The refund report was included in the ACFR, but we had it in the intro section. So this year we moved it to the statistical section. So to meet these 2 comments that GFOA had on them for that for 2023. I'm sorry, for 2023. So hopefully we have addressed their 4 comments, and that we will submit this letter with our ACFR, and they will look at it, and we will be good for next year for 2023. If there are any questions, let me know.
Congratulations on only 4 comments. That's pretty good.
Thank you. I thought so too.
Any other questions or comments? I have one. This is highlighted in red, meaning that we're supposed to make a motion to approve. Has this been informational in the past, or has the audit committee approved this before sending it on? Anyone have a history there?
They have approved it before sending it on.
I'll make a motion to approve this management response to GFOA.
Thank you. Do I have a second?
Second.
Thank you. Any other further discussion? Hearing none, all in favor, please say aye.
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 Thank you. Any opposed? Hearing none, that motion is approved. Thank you, Connie.
Thank you.
Now we have Ms. McKinley to talk about infrastructure and application security assessment.
Hello, good morning. So provided here is a kind of high-level summary of our third-party application assessment and infrastructure. So this year we had kind of multiple avenues of the assessment. So every other year we include the application, which is our main line of business system start. And then we do our typical external penetration assessment, internal. And then this year we also added, requested that the auditors do a Microsoft 365 security assessment. That was 365 was implemented earlier this year, back in the spring. So we wanted them to come in and look at the configurations to make sure that we didn't have anything exposed that needed to be just another set of eyes to look at those configurations. So on the next page there, the findings there in the chart. So we received the final report the end of October. So as soon as we get that, we start remedying those recommendations. So overall, we had 34 findings, 19 low risk, 13 moderate risk, and 2 high risk. Of those, we've already addressed 10. We focused on the high risk and moderate risk, and then any kind of low hanging fruit on the low risk things that we can mitigate pretty quickly. So this is very high level due to the sensitivity of the findings and the audit. So if you have any specific questions, you can feel free to send those to me or Chris Johnson. He's our security officer. He's also on the call. Any questions or comments?
Just one, can you give us an estimate when you feel that the other high risk will be closed?
I would say first quarter of next year. We're working on it already, and doing some research on what needs to happen. So this is a change that's going to impact every person at KPPA system wise. So we just have to be careful and come up with a plan of action on how we implement that change. Chris, if you have anything to add about the timeline there.
No, you said it perfectly.
Okay.
Thank you.
Any other questions? Well, I want to thank you all for engaging and having this done. Good luck on the rest of the mitigations, and we appreciate your efforts.
Thank you.
Now, did you want to request? Yes, go ahead.
Yeah. So for the next year upcoming, it will be just the infrastructure side assessment. So we're requesting approval for that assessment for next year. Roughly dollar amount we're shooting for is $80,000. There are currently two vendors that are on contract with the state government. So we will get proposals from both vendors per model procurement. So I'm seeking approval for that assessment for next year.
So moved.
I have a first. Do I have a second?
Second?
Say I have a first and a second to approve the assessment going forward for next year. Any other discussion? Hearing none, all in favor, please say yes.
Yes.
Aye.
Yes. Aye. Yeah. Aye, yes.
Thank you. Any opposed, say nay. Hearing none, that motion is approved. Thank you, Dominique.
All right. Thank
And
you all.
Chris. Thank you. All right. We're now into the Audit Committee administrative updates. First up is information and disclosure incidents with Ms. Bass.
Good morning, Carrie Bass with the Office of Legal Services, touching base on the potential disclosures or security breaches reported to the Office of Legal Services for the first quarter of the 2024 fiscal year. As you can see from the memo in the Audit Committee's material, there were 3 potential disclosures that implicated the KPPA's data disclosure notification policy, and 3 potential disclosures that were reported to the Office of Legal Services that were not a disclosure or security breach under state law, federal law, or the KPPA's data disclosure notification policy. The source of all 3 disclosures that implicated the KPPA's data disclosure notification policy were the source of the disclosures were internal KPPA staff. And if you look at the final chart at the bottom of that page, you'll see that the numbers of disclosures doesn't add up to 3, it adds up to 4. That's because one of the disclosures involved 2 separate member accounts. And then we can go to the next page, Sherry, for a brief summary of all 3 disclosure incidents. There were 2 instances where a member received another member's retirement information. And there was also an incident where a member received a health insurance form meant for another member. The KPPA followed up in all cases to make sure that the improperly disclosed information was returned to the KPPA, and made sure that staff and processes were corrected going forward to ensure those disclosures don't happen again. There were no disclosures or security breaches that were reported to the KPPA for this period for external entities such as vendors or business associates. Any questions? Okay, well, I will turn it over to my colleague, Stephanie Hull, to go over the fraud tips report.
Thank you very much.
Good morning. I'm Stephanie Hull, the investigator here at the Office of Legal Services, and I'm here to provide the information related to the fraud tips received since the last audit committee meeting held in August. We received 8 new tips and were able to close 5 of them after conducting a thorough review. 3 tips remain open for additional investigation or monitoring. We currently have 7 open tips. 4 of those are related to allegations of prearranged agreements. 1 involves employer reporting, and 1 involves pension spiking. Sherry, if you'd like to go to the second page, just for a minute. Okay, third page. We were able to close 8 of the cases that were open as of the last audit meeting. 1 of the cases was substantiated, and the member has appealed, so the Office of Legal Services is monitoring that appeal. For 3 of the cases, the information obtained by the Office of Legal Services did not support the allegations, so they were closed as unsubstantiated. 2 were complaints not associated with the KPPA, and 1 was already being addressed by another area in the KPPA. And for 2 of the complaints, we contacted the complainants to provide information which addressed any potential fraud issues. I know that's short and sweet. Does anybody have any questions or is any discussion?
Well, I just want to thank you, and I think having a tip line is very important for our integrity and our making sure that we're doing everything we need to do to support our members. So I thank you for your efforts.
Sure. Thank you.
Any other comments or questions? Hearing none. Ms. Coffey, you have a lot of your staff making presentations today. Would you want to introduce each as they bring on their information?
I will do that.
All right.
So first up is going to be Matt Doherty. He's going to go over the internal audit budget. He is an auditor too with internal audit. And he's been here since July of 2021, I believe. Matt, if that's not right, you can correct me. I will turn it over to him.
Perfect, thank you. As of the end of Q1 of fiscal year 2024, our division has spent a bit over $152,000, which is roughly 22.98% of our budget. All of that being, insurance, taxes, salaries. Do you have any questions?
One, Matt, is that full staff or do we still have positions that are unfilled?
I believe we are full staffed. Kristen,
We are, yes, fully staffed.
Well, it's good to see it's under 25%.
Yeah. Are there any other questions, concerns?
Thank you very much,
Thank
Matt.
you.
Kristen? You're muted.
It would not let me unmute. Sorry about that. Okay, I'm going to discuss the status of the current audits. Sherry, I don't know if you can zoom in. I know this is it's a lot of information, so it's kind of small on the screen. Right now, we have 24 projects that are on our audit plan. 3 of them have been completed and 16 are in progress. Of the completed projects, we had 1 that went over budget. You see it there in red. It went over by 25 hours. For this audit, the auditor who worked on this, it was his first time as a lead auditor. So 25 hours over budget for your first audit, not unusual. I'm not too concerned about that. The rest of the projects are on track with the exception of 1. It is the review of interest applied to member accounts. We had anticipated it would be completed in October. We're working with IT to develop a report to help us with the testing of this audit. And the report has just taken a little longer to build than we anticipated. We're hoping to have it this month, and if not, we are going to look at other ways to perform the testing so that we can go ahead and get this audit completed. Are there any questions about the status of any of the audits?
Hearing none, go ahead.
Okay, so Sherry, if you can go to the next page. We have released 3 audits since the last committee meeting. This is a summary. We are going to discuss each one of them individually. I'm going to go over the first one, and then I'll turn it over to Madeline. She's going to go over the review of investment manager fees. She was the lead auditor on that audit. She has been with us since March of 2021, so she's been with audit for a little while. And then the quality assurance self-assessment, we are going to let Melinda present that. She was the lead auditor on that engagement. And she used to be with another division in KPPA, but she has been with internal audit since October of 2022. So I'm going to go over the first one, the allocation of expenses. So it is shown on pages 335 through 339. So with this audit, we looked at how expenses are allocated between the C and the K plans. We found that the allocation method that was used was the one that was approved by the board. We didn't note any issues related to the allocation. So with this audit, if you look at Sherry, if you go to the next page, I just want to show, we've kind of changed the formatting. So this was the first report where we made a formatting change. We wanted to make sure we identified every risk that we tested. If management had established a control, we identified that control, and then we explained how we tested that control. And then if any exceptions were noted, those would also be included here. And we've also identified the COSO element and COSO principle that go with that item. This is a new format. We thought this was information that might be beneficial. We are open to suggestions if there's something else the committee would like to see, or if they would like to see it in a different layout, we would be happy to make any adjustments. But are there any questions on this audit?
Kristen, on what year of the allocation did you test? And the reason I'm asking that is the first year of the allocation, we worked on budget, and the second year we worked on actual. And I was curious as to which year did you test?
We looked at 2023, so the current year.
Okay, thank you.
I like this format on the risk and testing methodology that outlines the risks, the COSO element, and the COSO principle, as well as identifying the control.
Thank you. We thought this might be something that, I mean, we know we talk about risk, we talk about controls, but we thought this way helps people actually see what it is we're talking about. You will see in the audit that Madeline is going to present that this was a bigger section, so we made it an exhibit, just so it wasn't in the body of the report, but it is still there.
I think this helps document management's design of internal controls and addressing the 17 principles. So I think it's good documentation.
Thank you. Any other questions on this one? If not, I will turn it over to Madeline and let her discuss her audit.
Hey everyone, I'm Madeline Evans. So the review of investment manager fee project, that report takes up pages 340 to 356. And I'll just skip right on to this page that you're here on, Sherry, to the executive summary section that says that we had 2 findings, and then we had another issue that we addressed in a management letter, which has been included at the bottom of the report. So these 2 findings, as you can see, it's just a lack of keeping everything in one place and easy to find. And then the other one was an error that was found during auditing, but it has been corrected by staff. And they have developed another way to pick up on this particular issue. We had great communication with management. I really appreciate all the time that Ann Case took to explain her process to me. And Joe Gilbert made this awesome worksheet that really helped me grasp what he does with his particular investment managers. And so for these particular findings and the management letter, we didn't have any disagreements with management, and we agree with how they're gonna address the issue. So, sorry, my cat's here with me. Do you guys have any questions or concerns about this report? Anything I can go into more detail about?
What is the third one that you were talking about that's at the end of the report?
It's the management letter. Let me see where that starts. It starts on page 345, Sherry.
Yeah, I wasn't sure how we could come up
Sorry.
with standardized measurement on in item number 2.
Mhm.
When you calculate management fees for private equity versus real estate, I'm not sure that there is, I agree with the investment staff. I'm not sure there is a way to come up with a standardized acceptable variance across the asset classes. There's just too many significant differences among the asset
Yeah.
classes.
No, what I was recommending for that is we're working with real estate for these particular managers. This is the acceptable variance because they all follow the same kind of well, they have all the same considerations, but then for public equity, then you have this different variance. Like for each asset class, there's an acceptable variance. Because I was working on Joe's public equity, and so I was able to recalculate his, and he was also able to recalculate it to within 5 basis points, but then that's unreasonable for other asset classes because there's too much unknown. So getting it within 10 basis points is more reasonable for those asset classes. So I was just suggesting to agree, like everyone agrees, that for this particular asset class, use this variance. For another one, use something that's more appropriate for that particular class.
Any other questions or comments on this audit?
Sherry, if you can go to page 355.
Sorry, I gave you the wrong page number.
This is the, Ms. Hampton, this is the item that you were asking about, that third finding. And Madeline, I'll let you talk about that a little more if you'd like to.
Yes. So this, the management letter is mostly about updating procedures, adding some clarification to new users of the process. That's all it's all really about.
So that's basically just operational, so that everybody knows if you're gonna be doing that report, and sort of a checklist to make sure it's got everything in it. Okay, I got it.
I think the management response is on point, that they've got considerable documentation about how these fees are supposed to be developed, calculated.
All right, any other questions or comments? Thank you, Madeline. Appreciate your efforts on this and your comments and suggestions. Kristen?
Right. If Sherry, that page is perfect right there. I'm going to turn this over to Melinda and let her talk about the self-assessment that was performed on the Division of Internal Audit.
Good morning. Happy Monday. Can everyone hear me?
Yes.
Okay, great. Okay, so the self-assessment, I will briefly go over some of the points that will be of interest to you all. The background is the standard requires that a external quality assessment or internal audit activity be conducted at least every 5 years, which can be accomplished through a self-assessment with independent validation. Since KPPA was out of compliance last year, executive management indicated that internal audit teams should make the self-assessment a priority. So that's just a little bit of background. On page 358, under the opinion, I'll point out that our overall opinion was that the Division of Internal Audit partially conformed with the standards and generally conforms with the Code of Ethics. And we did the partially conforms due to an external assessment or internal assessment with validation had not been completed in the past 5 years. And also a governance audit has not been completed for the agency as a whole, although we do review governance with each audit engagement that we do. We look at that. Under objectives, the primary objective of the quality assessment was to assess the Division of Internal Audit's conformance with the standard and also the Code of Ethics. So with the audit, we evaluated the effectiveness of carrying out our mission, which is also included in the internal audit charter. We also identified successful internal audit practices, opportunities for continuous improvement to enhance our efficiency and effectiveness. We do need to request a external audit to validate what we have assessed, and we will work with management on getting that done. And just to include a side note with that, the IIA has a process in place to assist us with that, requesting that. The scope of and the scope's on page 359, the scope of the quality assessment included the Division of Internal Audit, and we looked at the previous fiscal year and including information for this. The method that we use, some of the methods, there were 2 internal audit staff members that reviewed, that completed the self-assessment, and then it was reviewed by 2 other staff members who are currently working on their certificate to get certified as internal audit, their certificate of internal audit. The results were presented to our chief auditor. She provided a management response to the findings. And I'll also note here that the questionnaires and surveys that were sent out were designed by the IIA. On page 361, we'll just briefly go over some of the results with the self-assessment. And then if you look under standard, the element 1300 to 1322, there's the partially conforms. And this again was due to the external assessment or the internal audit assessment with the validation had not been completed within the past 5 years. The opportunities that we found here for continuous improvement, we wanted to continue to develop the quality assessment. And we also want to start utilizing surveys after our engagements as part of the assessment process. So those will go out after we complete an audit. Our response to this, the partially conforms, was we agreed that there's a gap in the standard, and we will work with KPPA management on the procedures to obtain the internal assessment with validation. And we intend to get this completed in fiscal year 2024. And we also have developed surveys that we will begin sending out with our completed projects. Also on page 361, under the standard element 2100 to 2130, there's another partially conforms. And this is due to the internal audit activity evaluates controls for effectiveness and efficiency and promotes continuous improvement. We found that there's opportunity for improvement here to review the organization governance. And we discussed this doing a governance audit at the recent audit committee meeting back in May of 2023. And we hope to have this audit or this information included in our next risk assessment. And again, we do take opportunity to look at governance in each of our audit engagements.
I'm a little confused. If the Kentucky Revised Statute established the governance for the systems, what is it that we're going to audit?
With governance, it's not how it's set up. It's things like tone at the top. How is information communicated? That's what it means by governance, not the governance of the organization from a statutory standpoint.
Okay. On page 362. I'm sorry.
One more question. Is there IIA processes and procedures for a governance audit?
I believe that is the professional article that is going to be presented later in this meeting. But yes, there is guidance on how to do this.
All right.
Okay. On page 362, each element conforms. I don't have anything on 363. And then 364 is just an appendix A. And that's all I have. Are there any other questions or comments?
Just a comment to Kristen that I really appreciate the fact that you've got bringing your staff in so we can get to know your staff. So thank you very much for that.
You are welcome. You will see a little more of them at each meeting. We're going to let them present. At least if they do an audit, they will definitely be the one presenting it, and they may have other things they present as well.
Thank you.
I don't know that we need an official vote, but I do think it's necessary and recommended that you get your external review of your self-assessment. So I think you should go forward with that as recommended.
I know for this item, we were asking that management, or not management, that the audit committee vote to accept management's responses to the completed audits and if necessary, vote to obtain the validation.
Kristen, from the audit committee, you want that not from the board?
So with the accepting of the results, it would be similar to what was done with the external audit from the APA. You accept the results and then to present to the board. And then with the external validation, it would be to approve us to go to the board and work with staff, KPPA staff to hire or to obtain the assessment, but it would still go to the board as well. Or it could just go to the board if the committee would prefer it that way.
I'm unclear what kinds of things. Let me ask Michael Board to comment on. I hear what you're saying, and I think it's a really good report. I'm just not sure about precedent, and are these the kinds of things that we should pass from the audit committee into the board? So Michael's on, if he could comment.
Yeah, exactly what is your question, Ms. Hampton?
Kristen was saying that she would like to have this basically approved by the audit committee and sent to the KPPA for approval. And is that, I just haven't seen this kind of an audit go through that. So.
Yeah, I mean, as a committee of the board, if it's going to be approved by the committee, it needs to move on to the full board for the ratification of the committee's actions. So if that's, the board does have to do that, has to ratify any action of the committee. So that wouldn't be necessary. As far as whether that is the appropriate thing or not, I'm not familiar with this, specific this audit type, but the committee does generally approve or audits and before they're passed on to the board. Kind of at a loss here for exactly what the question is.
Michael, the question is, should we approve this, man? We asking a legal opinion. So, that just give us a legal opinion is all we asking for, in my opinion.
Thank you, William.
I don't understand. I don't know how you don't understand that question if you are legal guy.
I'm sorry, I'm just not, the question of should they approve an audit report, is that the question? I'm not understanding the question that's being asked of me.
This is not an ordinary audit. It is a quality assurance and improvement plan self-assessment.
Yes.
Different than an audit. And just.
So do we have to approve this? It's a legal question. If you don't know, say you don't know and we'll come back or something. It shouldn't be that difficult of a question.
I don't know that answer.
Okay.
To my knowledge, this has never been done.
Yeah.
May I add color here? I think the precedent is, and we are to approve the audits that are completed to go on to KPPA. The last one, the assessment, is not completed because they haven't had an external review. So approving going forward with an external review, then that comes back, then we could approve it at that stage. Does that sound appropriate?
That is what internal audit is requesting, the approval, the acceptance of the first two and the request for the external validation for this self-assessment.
So Bill, if I understand what you're saying is that the next step has not been completed and we should consider whatever it takes, funding, time, etc., the next step. And when the next step is done, bring the whole thing back.
Correct.
Okay, but for this, look, man, I want my person that's representing me legally to understand this. If he doesn't understand this and I got to get Bill to answer this, I don't feel comfortable with that.
Yes, sir.
So the action we are going to take is twofold. One, Michael, to look into this and that is an appropriate action, and two, a motion to approve the next step, which is the validation. Is that correct?
I would offer to make a motion to accept the two internal audit projects, the review of expense allocation and the review of the investment manager fees, and to also accept the self-assessment project and request approval for a external assessment in conjunction with the quality assurance plan. And those can be provided as recommendations to the board for consideration and approval.
Betty, I'll tell you why I'm a little hesitant. I mean, we're approving things that somebody else is going to look at. If they come back and say, we disagree with something, then what I would approve would be just go to the next step and come back to us rather than approving this. We can accept it pending the review. You're on mute, Betty.
I'm thinking, I wasn't even talking. If I understand it correctly, the self-assessment portion has been completed. And to complement the self-assessment portion, we need an external review. So I'm suggesting that we accept the self-assessment, not approve, but accept and send the self-assessment to the KPPA board for their action, which is normally what we do with committees and the boards. The committees make recommendations for actions to the full boards, and the full boards can go in any direction they want.
Yeah. I'm still a little uncomfortable with that. I'd like to see the external review, just like we get an auditor. Yeah.
I'd like to make a clarification. There's two ways for internal audit to be reviewed, and that is to hire someone to come in and do a third-party review. The second way is a self-assessment with an external review. That's 2 steps to complete that second option. We've only completed the first step of the 2 steps, is my understanding. Am I off base here, Kristen, in what the IIA or whoever it is recommending?
No, that is correct. So with the option we've chosen, it's a self-assessment that will then have an external validation. So the self-assessment portion is completed, and we are seeking approval to obtain the external validation for this project.
Okay, I misunderstood. I thought the self-assessment was an option that we could use periodically. And then say once every 3 to 5 years, we did an external assessment. So if we can if we only do a self-assessment when there is a external assessment applied to it, then I don't think we need to move the quality assurance item forward until all parts of the project are completed.
So
that's where I'm at.
I've always wanted to use this word. Can we bifurcate? I don't even know if I said it right. Let us have a motion on the 2 completed internal audits, the review of expense allocations and the review of investment management fees. Can I have a motion to approve those?
I'll make that motion.
And do we have a second?
Second.
First and a second. Any further discussion of those audits? Hearing none, all in favor, please say aye.
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 Any opposed?
And I'm abstaining. I don't know what, I'm just gonna abstain on this, because this conversation, I don't feel like we know whether we should do it or what we should do from this standpoint. We haven't got legal counsel say, hey, this is what we've done in the past, this is what we do. So I don't know. I mean, I'm kind of confused.
William, I think this is on the first two audits that were complete. We bifurcated. And so the vote, the motion that's on right now is the first two audits, which were complete. Okay. And then the one I'm just not comfortable with what I already said, so that's why we're, I think, comfortable passing these first two.
All right, well, look, I was gone for a little bit. I
Okay.
came back, so I'm going to abstain on this.
Okay.
All right, all right. The motion has approved. So that motion goes forward. Now we have the second discussion is the quality assurance and improvement plan self-assessment. And that process has two parts. This is the first part that's been presented. But in order to complete that, we need internal audit to go forward and obtain through regular processes a self-assessment. What's the right word, Kristen?
An external validation.
An external validation. So do we have a motion to do the external validation?
So moved.
Do I have a second?
I'll second.
Any further discussion?
Just a comment, Michael, more to you, and Kristen, is this the first time we've done it? I just want to make sure we do it right. So thanks for the conversation.
Is this the first time we've done an internal audit of internal audit? We have, it's required every 5 years. However, I think that this is the first time that we had to send it off, but I'm not sure about that. Oh, Connie's on. She's on.
Yes. No, we have done, when I was the internal auditor, we did a self-assessment with the validation, and we brought it to the audit committee after the validation was complete.
Okay.
And provided it then at that time. We did not bring the self-assessment alone. We brought the completed project to them.
Okay. Thanks, Connie.
And we will bring the completed project, but we just weren't sure that we could seek the external validation without approval. That's why we were coming to the board today, to just make sure we didn't do something that the committee didn't know we were doing.
Okay, well,
We
no,
wanted approval before we made that step.
Yeah. No, I'm glad you did, because it was interesting to go through this, and then we'll understand more when you bring the validation back. So thanks.
So I think we have a first and a second. We're in discussion. Any further discussion? Hearing none. All in favor, please say aye.
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 Any opposed? That's passed. All right, so at that point, we are now at the Public Pension Fund Auditors Fall Conference. So Ms. Evans, would you want to tell us about that, please?
Yeah. So KPPA, in conjunction with TRS, their internal auditor, Brad Cook, we will be co-hosting the APFA Fall Conference of 2026. Here I have some screenshots of APFA's website just to introduce you all to them, because they're a great asset to public pension fund auditors. I got a lot of the conference I went to. So here you can see their board. I was able to meet Nikki Russell and Darlene Dempsey personally and get to know them a little bit more. And we're also working with them to build our agenda. We're in the really very early stages because it's 3 years from now. And then Sherry, I'm on page 368, so just the next page. Or yes. So this is, if you're curious and want to poke around their website, this is their publication and resource page. So new internal audit shops can go to APFA and get a template of a charter and other important documents that all internal audit shops should have. And then they have a list of all these other websites to go to for help if you need it. And then Sherry, could you pop down to page 371? Okay, so we don't have our agenda yet because again, it's 3 years in the future, but I wanted to show you guys an example of what the agenda will look like. And I wanted to point out that some of the speakers for this Arizona conference are the board members of the pension fund. So we were curious if any of you all would be interested in presenting at our fall conference of 2026. I know that's a long time in the future, but we just wanted to put a bug in your ear that we might be coming to you to see if you're interested. So Arizona also used their CIO on page. I can't find them. I think it's on the same page. Oh yes, so it's item 1G. So they have their CIO. So we might also be asking other executive staff member if they want to present. And if you're curious about what exactly is what is being discussed in all these, a more detailed description of each item starts on page 374. Just for you guys to read over. But that's all I wanted to present. Do you guys have any questions?
Well, one question I'd like for you to clarify, and that what is the commitment of KPPA financially as well as staffing for being the host?
There's no commitment financially because APFA will be funding it all. That's what our membership goes towards, is hosting these conferences, attending them as well. And we also, so financially, nothing on KPPA. Staff-wise, this is a project that we will be charging hours to, so you'll be able to see all the staff time that we spend on this particular project. I don't have an estimate right now about how long it'll take. This event, once it does happen, is a week long.
I have worked with other groups on planning events, nothing quite to this scale, but at least a couple of days of training. And the time commitment is, a lot of it goes into getting the speakers and getting the location. But in terms of hours, it's probably not more than 10 or 15 hours, honestly, of working. Because once we're familiar with a lot of speakers that we're going to be able to call on. APFA is going to help get speakers, so they'll also be putting resources into this, and they'll be helping with the location. So what they really need from us is just some ideas, places they can look at, and local speakers that they don't have knowledge of.
And who are you partnering with?
Brad Cook at TRS. Is that what you meant?
Yes, at Kentucky Teachers.
Yes.
Okay.
Yeah. We did also reach out to the judicial system to see if their auditor wanted to join, but we found that they don't have an internal auditor quite yet. Might change in 3 years. The invitation's open.
Judicial Forum only has 2 or 3 staff members.
Oh,
That's why they don't have internal audit.
Okay.
It might be like the Supreme Court. They don't need an ethics law.
Moving on.
Yeah, that's not fair at all. Not even funny.
I just want to compliment you all, and I think it's an honor for you all to be asked to host, and look forward to your partnership with Teachers Retirement System here too. And so look forward for you all to keep us informed on how this develops.
Yeah.
Any other comments or questions regarding the fall conference for the Association of Public Pension Fund Auditors.
It's a mouthful.
Hearing none, we've got NC PERS, Best Governance Practices.
So I'm going to turn this over to Will and let him talk about this. So you had asked if there was guidance from the IIA. So it was not the Institute of Internal Auditors, but it is the National Conference of Public Employees Retirement Systems, where we were able to find some guidance on governance audits. So that's the article that's being presented, and I'm going to turn this over to Will. He has been with us. He came on as an intern in May of 2021, 2022, May of 2022, I believe. And then he joined us full-time in September of 2022. So we are glad to have him here.
Welcome.
Morning, can you hear me?
Yes.
All right. The article I chose to present this morning is from the National Conference on Public Employee Retirement Systems and covers the best governance practices for public retirement systems. It provides an in-depth guide to their recommendations across a variety of specific areas of governance, including risk oversight, strategic planning, reporting, and stakeholder communications. It also outlines challenges and opportunities organizations can face while striving to have the most effective and efficient corporate governance possible. As I read these recommendations, the consistent theme that stood out to me was continuous improvement and always striving to improve the corporate governance structure and system in place within the organization. They also included some really interesting facts, such as that research has shown that effective governance may improve long-term investment returns by up to 2.4% annually, which I thought was very interesting. And it covers, and if you would scroll down, you could see all of the categories that this touches on and gives recommendations for how to best implement corporate governance in a public retirement system. Are there any questions?
Well, I found it very educational and very challenging to read this publication.
Mhm.
And this, I understand, is what you would use next year as a guide for your audit. Is that what this is for?
This is one of the things that we've found from a well-known organization that would go into how we would set up and structure that kind of an audit. Not to say that we would follow this exactly.
All right.
I think that's great. And now that we're working on a strategic plan, this might be something to hand to Dave to in their work.
I think there's
Yeah.
lots of good suggestions in here for best practices that we could use.
I'll also send it to ProValiant in case they don't have it.
Very good.
And if you need a copy of it outside of board books, let us know and we can get that to you.
Yeah, Kristen, if you'd email me one, I'd appreciate it.
I will do that.
All right. Well, quality reading. Thank you very much.
Thank you.
Do we have any other business or any other subjects to discuss in today's meeting? Hearing none, I think we've followed everything listed, and it is appropriate to adjourn. So I will adjourn the meeting. Thank you all very much. I appreciate everyone's time.